What is the key difference between Sukuk and traditional bonds? Have you ever wondered how Sukuk differ from traditional bonds? This question is important for anyone interested in finance, especially in the context of Islamic finance. Let's break it down in a straightforward way. First, Sukuk and traditional bonds have different financial structures. Sukuk representing partial ownership in tangible assets or projects that comply with Islamic law, known as Sharia. This means when you invest in Sukuk, you own a share of a real asset, and your returns come from the profits generated by that asset. On the other hand, traditional bonds are loans made to an issuer, who promises to pay back the principal amount along with fixed interest payments. This interest, known as riba, is not allowed in Islamic finance. Next, let's talk about compliance with Sharia. Sukuk must adhere to Islamic principles, which means they cannot involve activities like alcohol, gambling, or interest-based lending. Traditional bonds do not have these restrictions and can be backed by any type of asset. This makes Sukuk a more ethical choice for Muslim investors. Now consider the way returns are structured. With Sukuk, returns are based on profit sharing or rental income from the underlying asset. This aligns with Islamic finance principles, which prohibit guaranteed interest. In contrast, traditional bonds pay fixed or variable interest regardless of the issuer's financial performance. Another key difference is how they are valued. The pricing of Sukuk depends on the market value and performance of the underlying asset. Traditional bonds, however, are primarily priced based on the issuer's credit rating and the prevailing interest rate environment. When it comes to ownership rights, selling Sukuk means transferring ownership rights in the underlying asset to the buyer. In contrast, selling traditional bonds transfers the debt obligation to the new owner. In practical terms, Sukuk provide a Sharia-compliant alternative to conventional bonds. They allow Muslim investors to participate in capital markets without violating Islamic prohibitions. The global Sukuk market has been expanding to meet the needs of Muslim investors and institutions seeking compliant investment opportunities. Understanding these differences is essential for anyone looking to navigate the contemporary issues in Islamic finance. As the Sukuk market continues to grow, it offers unique trends and opportunities that set it apart from traditional bond markets.